Generating absolute returns since the financial crisis can require an open-minded approach to the alternative asset class. After all, many of the traditional asset classes suffered in the downturn. International shares and indexed bonds significantly underperformed cash. Property and fixed interest performance was no better than cash. Alternative investments outperformed all these asset classes on a 5-year timeline. A contrarian approach can be a powerful strategy in the global markets. In the spirit of this strategic viewpoint, the Positive Theta Fund has built a series of strategies around selling options. Selling options is contrary to what some professional investors and investment managers consider prudent. You may have heard the statement, selling options is like picking up pennies on a train track. It refers to the fact that when you sell an option, your reward is limited to the sale price, while the risk is potentially unlimited if the market moves unfavorably. There's always the fear of trading short premium strategies in times of extreme market volatility. The Positive Theta Fund, through its research and over 3 years of actual trading, has discovered that where there is fear, there is opportunity. Since September 2007, the Positive Theta Fund has been capitalizing on this opportunity. We've implemented our trading methods primarily in the energy markets. As you'll see from our performance results, the fund has been highly profitable. You can download our monthly reports by registering at www.noncorrelatedcapital.com. This, however, is just the beginning. The fund has maintained a commitment to research and development during this time, and now we've completed testing of our strategies over 26 of the largest US futures markets. The results of these tests will be made available to you at the conclusion of this presentation. You, as a potential business partner or professional investor, have found the Positive Theta Fund at a key moment in its history. We're now seeking to expand the reach of our trading to cover more markets, and in doing so, we can greatly improve the reliability of our performance. The Positive Theta Fund's operations revolve around 6 cornerstone principles designed to address and minimize the risk and maximize profitability. Multi-strategy. The fund utilizes 10 proprietary trading strategies. Some strategies are quantitative in their approach, following a rigorous mechanical methodology. Other strategies rely on qualitative analysis techniques, the manager taking an opinion about emerging opportunities in particular markets. All strategies have proven positive statistical expectancy and perform in isolation. When they're combined into a larger macro strategy, the result is lower volatility in our returns. Time. The deployment of options positions depends largely on the expiry calendar of individual option series. Our strategies benefit from the passing of time, so deployment in a staggered cyclic fashion creates diversity in time, minimizing simultaneous risk exposure. Markets. The fund is seeking to implement the trading strategies across 26 of the largest US futures markets, gaining benefits of trading across a wide range of non-correlated financial instruments. Currently, we are benefiting from opportunities in markets such as coffee, gold, and the Japanese yen. Capital allocation. Asset allocation is tightly controlled to reduce risk exposure, not only to individual positions, but also to individual strategies. Intelligent capital allocation can reduce a loss many multiples higher than an initial reward, down to a tiny proportion of the total assets of the fund. Capital reserves. Maintaining high capital reserves ensures plenty of dry powder is available to capitalize on additional opportunities and to smooth further the volatility of returns. Multi-manager. To address single manager risk concerns, Positive Theta Fund has 3 managers trained in the execution of our strategies. This ensures the fund remains active whenever the markets are open. Performance requires consistency, and consistency means no downtime. Let us demonstrate the synergy of these approaches through an example. The Positive Theta Fund, 10 trading strategies. Trading strategies 1 to 4 are non-directional, 5 to 8 are directional, and 9 and 10 are used for hedging. The fund can invest in up to 26 futures markets, as well as target specific high opportunity markets such as the crude oil market. Let's take a closer look. Trading Strategy 1, or TS1, is a market-neutral strategy. The capital allocation model allows 25% of total fund capital to be available for TS1 positions. TS1 concentrates on a unique subset of 10 futures markets from within the 26 total available. With 25% of total fund capital invested in this strategy, 2.5% of total capital is allocated to each position. The trading positions are then deployed monthly across the entire monthly cycle of option expiries. The time decay profiles of each position are now skewed, reducing risk exposure. This equates to 12 positions per market per year. Now, let's look at the historical performance of just one of the 10 markets within TS1. Crude oil. The target monthly return for this and every market position within TS1 is 12%. For example, on a $10 million portfolio, this would be 12% of a 2.5% allocation. In dollar terms, $30,000 or 0.3% of total portfolio. Over 10 years historical testing, the worst month loss was 35.4% of the allocation. On a $10 million portfolio, this would be $88,500 or 0.9% of total fund capital. This loss occurred only once in a 10-year trial. The average loss over 10 years of historical testing was 16.3% of the allocation. On a $10 million portfolio, this would be $40,750 or 0.41% of total fund capital. The probability of loss based on the 10-year trial was 18.3% or 2.1 times per year. The high probability of success per trade compensates for the very occasional larger loss. Now compare the statistics of the remaining 9 markets within the strategy and the total performance result. TS1 produced an allocation average return on investment of 83.4% against a drawdown of 14.8%. This result is over a 25% capital allocation. The annual average return on the total fund capital is 20.9% against a 3.7% drawdown. Now compare this with the historical performance of the remaining 9 strategies. The allocation average return on investment for the strategy complex is 82.5% against a drawdown of 15.6%. The total strategy complex operates over a 50% capital allocation. The annual average return on the total fund capital for the entire strategy complex is 41.2% against a drawdown of 7.8%. And what about the other 50% of total fund capital? In extraordinary times, there's extraordinary opportunity and the need to rebalance the portfolio for greater overall market volatility. This is why the fund maintains a high capital reserve ratio. Although such times are rare, the fund stands ready to capitalize on extraordinary opportunities. Additionally, the fund never allocates more than 80% capital, even in the most extreme market conditions. On the topic of extreme market conditions, let's look at how two of our strategies, TS1 and 7, performed through some of the worst market conditions seen in 70 years, the global financial crisis. This chart shows the price of oil trading from March 07 through to the end of 2008. The yellow lines represent our positions in the market that are initiated via Trading Strategy 1. As long as the market does not breach either line, we return a profit of 12% for that month. This is a 12% profit on the 2.5% allocation, which equates to a profit of 0.3% of the total fund capital. Notice how positions adjust dynamically to the volatility of the underlying market. When the market's volatile, the yellow strike levels become further apart to compensate. You can see the successful trades highlighted in green on the chart. The nature of option selling is such that the success rate is high. Historically, the success rate of TS1 is 89%. These months show a loss for Trading Strategy 1. Let's take a closer look. When the strike line is breached, the position is immediately closed. The average loss that results is 24% of the allocation. This equates to a 0.6% of total fund capital. The red lines represent Trading Strategy 7. In these examples, Trading Strategy 7 was initiated at the moment of the TS1 position being closed at a loss. TS7 is traded as both a linked strategy to TS1 and also as a strategy independently operating in other markets. In this way, TS7 acts as both a risk reduction mechanism for TS1 and a separate directional trading method. When TS7 operates independently, a selection criterion is applied to find the top 4 markets in which to initiate the strategy every month. The historical success rate of TS7 as a directional strategy is 92%. This chart depicts some of the most volatile trading conditions we've seen in decades. So, how did TS1 and TS7 perform? Trading Strategy 1 returned 41.13% for 2008, and Trading Strategy 7 returned 31.4% for the same period. These results are based on historical data and assume that the fund is sufficiently capitalized to implement the trading strategies across the required range of futures markets. For the real-time trading results of 2008, please register at www.noncorrelatedcapital.com. Notice this representation illustrates how TS1 trades over 10 markets simultaneously. Spreading the risk over many markets smooths the volatility of returns. The high success rate, combined with intelligent capital allocation and risk management, creates a portfolio highly resistant to downturn. Pause to consider. The Positive Theta Fund believes that investor sentiment causes past trends to continue beyond rational expectations. However, over time, markets revert to a fundamental fair value. PTF aims to exploit these opportunities while using an innovative approach to risk management and trade analysis. This investment approach has been validated in real trading results accumulated since September 2007. You can download our monthly trading performance by registering at www.noncorrelatedcapital.com. If you're interested in discussing with us further how the Positive Theta Fund can help improve your absolute returns, please contact info@noncorecap.com. We look forward to you joining us in the Positive Theta Fund.